Well, for NBFC sector, it's going to be a strong quarter in terms of their AUM growth or loan growth as well as earnings momentum. While banking sector will face rising cost of funds in Q2 FY24 and for next couple of quarters, NBFCs will see their cost of funds peak out in Q2 FY24 or at the max in Q3 FY24 for some of them. Hence, one can expect guidance on net interest margin to be better or improve from the lenders for the coming quarters. Momentum in disbursals to remain strong, which will actually aid in the loan growth also to be on the healthier side or on the stronger side for many players. Consumption-based demand has been strong as seen in the pro forma business update of Bajaj Finance. So let's take a look segment-wise what to expect from each of the segment in NBFCs. For housing finance companies, disbursals and AUM, that is asset under management or loan growth, will be on the healthier side. Net interest margin is expected to remain steady for top players like Can Fin Homes, PNB Housing, etc. Net interest margin can moderate for small ticket size loan players like Repco, Aavas and Home First Finance. For commercial vehicle financiers, they will see loan growth to be on the healthier side except for Shriram Finance and Sundaram Finance. Shriram Finance typically has seen growth in second quarter to be slightly on the weaker side when compared to other quarters, so seasonal in nature. Cholamandalam's AUM growth rate can be in line with their Q1 FY24 performance, that is around the 40% YOY growth or year-on-year growth. For microfinance sector, this will be the segment of focus for investors. Now, strong disbursals will aid in loan growth for many players. Don't expect any asset quality headwinds except for the one expected in Fusion MFI. Some of the stocks have already rallied or seen valuation rise due to the strong earnings expected in Q2 FY24, which has been discounted in the stock price. So gold financiers, IIFL Finance strong show in terms of growth will continue even in this quarter like it did in the previous quarter, while competition from banks will continue for players like Muthoot Finance and Manappuram. Hence, one can see moderation in growth for Muthoot Finance and weakest gold loan growth in case of Manappuram. So the expectation on net interest margin will be on the steadier side for all the gold financiers. Consumer finance loan growth will be healthy due to better demand and improved macro situation. There can be slight decline in net interest margin owing to rise in cost of funds. However, no asset quality woes are expected. Some of the key lenders estimate from Kotak Securities are for Bajaj Finance, they estimate NII growth of close to 29% YOY and about 6.2% quarter-on-quarter, while PAT is expected to grow at 29% YOY and about 4.5% quarter-on-quarter. For Shriram Finance, NII growth is expected to be at 17.3% YOY and about 3.7% quarter-on-quarter, while PAT is expected to grow at 24.5% YOY and about 5.5% quarter-on-quarter. For Muthoot Finance, the NII growth is expected to be at 23.6% YOY and about 2.6% quarter-on-quarter, while PAT is estimated to grow at 16.4% YOY and about 3.5% quarter-on-quarter. For LIC Housing Finance, Kotak Securities estimates NII growth of 74% YOY and a decline of 8.4% quarter-on-quarter, while PAT is estimated to grow at 282% YOY and a decline of 11.7% quarter-on-quarter.